Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FEDEX CORP quarterly report. FedEx Corporation offers a wide range of businesses and services to its customers. These include transportation services, express, freight, less-than-truckload freight, time-specific freight shipping, and small package ground delivery e-commerce and digital solutions, DataWorks printing and shipping management. Digital printing, professional finishing, document creation, design solutions, direct mail, signs and graphics, custom-branded boxes, copying, computer rental, free Wi-Fi, corporate print solutions, shredding, expedited U.S. passport processing and renewal, and digital notarization, packing services and supplies, document and business services, retail access for package transportation, logistics services, air and ocean freight forwarding, cargo transportation, specialty transportation, customs brokerage and clearance, trade management tools and data, door-to-door solutions, third-party logistics and supply chain management solutions, inbound logistics, warehousing and distribution, fulfillment, contract packaging and product configuration, systems integration, returns process and disposition, test, repair, refurbishment and product liquidation, sales, marketing, administrative, information technology, and back-office support services. FedEx Corp stock price drop. A year of challenges in the past year, FedEx Corp's stock price has dropped by approximately -8.35%, a decline largely attributed to several key news events and economic factors. The company's lowered fiscal outlook, global trade volatility, elevated operating costs, and weak industrial economy have all contributed to this downturn. On March 21, 2025, FedEx reduced its revenue and profit outlook for fiscal year 2025 due to continued economic uncertainty and softening shipping demand. This move was followed by a significant stock price drop of over 9%. The company's anticipation of a $1 billion hit from global trade volatility, including lower shipments from China to the U.S. due to tariffs, has also negatively impacted its performance. Elevated operating costs, including higher wage and purchase transportation rates, have further pressured FedEx's profit margins. The weak industrial economy has constrained demand for the company's services, particularly in its business-to-business segment. As a result, analysts have adjusted their price targets for the stock, reflecting the impact of these headwinds. The cumulative effect of these challenges has led to FedEx's stock touching a 52-week low of $217.21 on April 3, 2025, representing a decline of 21.04% over the preceding year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by increased U.S. domestic package volumes and improved yields, higher international economy package volumes, and favorable exchange rates improved base yields, particularly for international priority packages. On the other hand, revenue decline is primarily attributed to lower volume in both FedEx Freight and Express segments, decreased average daily shipments, and lower base yields, macroeconomic conditions affecting FedEx Freight segment revenue. Net income at the company experienced fluctuations over the two-year period. Initially, it increased by $30 million, or 3.8%, from $794 million to $824 million in 2025 compared to 2024. However, this growth was short-lived, as net income decreased from Q2 2024 to Q2 2025, and again in the first quarter of 2026 compared to 2024. Profit margins also underwent significant changes. The operating profit margin decreased from 4.9% to 3.7%, but later increased by 30 basis points to 5.3%. Additionally, the operating margin decreased by $312 million and 280 basis points from 18.8% to 16%. The reasons behind these changes are multifaceted. Inflationary pressures, changing fuel prices, geopolitical conflicts, and uncertainty regarding international trade all contributed to the fluctuations in net income and profit margins. Furthermore, the planned spin-off of FedEx Freight incurred significant costs and expenses, which likely impacted the company's financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations. The 3 months ended August 31, 2025, saw the company produce $1,716 million in operating cash flow, with a significant portion of this amount being positive at $1,265 million. This suggests that the company is successfully managing its day-to-day activities and generating sufficient funds to support its growth and operations. The company's financial summary reveals a mixed picture regarding its debt level and interest expenses. While long-term debt increased by $1,140 million from May to August 2025, the overall trend shows a slight increase in total liabilities. However, this growth is not significant enough to raise major concerns. In terms of interest expenses, there was an increase of $37 million from 2024 to 2025, indicating a rise in financial obligations. Nevertheless, the annualized weighted average interest rate decreased to 3.6% at August 31, 2025, suggesting that the company is managing its debt effectively. Overall, while there are some fluctuations in debt levels and interest expenses, they do not appear to be significant enough to warrant major attention. The financial performance of various segments and regions within the company has shown mixed results. On a positive note, the Federal Express segment experienced a 4% increase in revenue, while U.S. domestic package volume and international economy package volume both saw a 5% increase. Additionally, U.S. domestic composite package yield rose by 3%, and international priority package yield surged by 13%. However, some segments struggled to keep pace with the growth. The FedEx Freight segment suffered a significant decline in revenue, -3%, and operating income, -18%. International priority package volume also declined by 10%, while international economy package yields decreased by 6%. Furthermore, U.S. average daily freight pounds dropped by 59%. Overall, the company's performance was marked by both growth and decline across different segments and regions. Management is optimistic about the company's outlook, focusing on improving long-term profitability through business optimization initiatives and cost-cutting measures. Key strategies include reducing structural costs through a workforce reduction plan in Europe, expected to yield $150 million in annual savings, investing in Network 2 program to enhance efficiency and reduce costs, pursuing the full separation of FedEx Freight through a spin-off by June 2026. Management also prioritizes investments that support increasing efficiency and reducing costs, while maintaining liquidity through cash and available financing sources. Capital expenditures for 2026 are expected to be approximately $4.5 billion, driven by Network 2 initiatives and other modernization efforts. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company declared dividends totaling $688 million in 2025 and $676 million in 2024, with per share amounts of $2.90 and $2.76 respectively. Additionally, the company has also repurchased shares, purchasing 2.2 million shares in 2025 and 3.4 million shares in 2024 for a total amount of $500 million and $1 billion respectively. Concerns over supply chain disruption. The company faces potential disruptions to its supply chain, which could impact operations. Several factors contribute to these concerns, including lower shipments from FedEx Freight and the expiration of a contract with USPS. Additionally, uncertainty over global trade policies and geopolitical tensions may affect customer demand and shipping patterns. Furthermore, disruptions in global supply chains are also a concern. These issues have the potential to cause significant problems for the company's logistics and delivery services. That concludes the financial summary for FEDEX CORP. Feel free to comment below, and I will be happy to answer them when possible.